Good morning and thanks so much for tuning in. Happy Friday to you. This is BQ Prime. You're watching Trade Talk. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
And I was thinking, I was sneezing earlier and I was hoping that I wouldn't catch a cold. And we're also standing here today hoping that the Indian market doesn't catch a cold, and it hasn't. So far, it has stayed resilient despite weak cues from overseas. Those weak cues persist today as well, Hiral.
Absolutely. That's exactly what I was going to come to, that, the correlation between the global and the Indian markets is not that tight currently. Though SGX is indicating, I shouldn't say SGX, I should say Gift Nifty, that is indicating a mild negative start in terms of markets. But whether that trend will continue and whether we will play a catch up in the last hour of trade is something we need to wait and watch, because clearly a downtick in Europe as well as Asian markets clearly mirroring what happened in the US.
Yeah, there are few stocks that moved very sharply yesterday, Reliance Industries included, where we didn't really have a reason yesterday. Today we have some bit of a reason for Reliance Industries. For the other few, we don't, but then we'll talk about that as well. For now, let's look at the technicals and see where they stand right now.
Right. So overall, Alex, if you see in terms of markets currently, record high closing is what we've been seeing so far, right? Now, this is the eighth consecutive session where we've seen gains that have come in terms of markets. 865-point move in the last eight sessions is what we've seen in terms of Nifty 50. Specifically, it's real estate, oil and gas, auto, and healthcare that have remained the top gainers, whereas there has been profit booking that has come in, specifically with regards to IT, financials, and FMCG in yesterday's session. So we will be watching out for these sectors pretty closely in trade today. 19,375 is where Nifty is finding its support. If we are able to sustain above those 19,375 levels, then a rally towards 19,575 leading up to 19,625 is something which could be on the cards. However, if we close and go below 19,375, then the uptrend is absolutely vulnerable. So watch out for this level pretty closely in terms of Nifty. Moving on to Bank Nifty, 65,350 is where the clear support level is on Bank Nifty. And if you're able to sustain above those levels on closing basis, then an upward rally towards 66,000 and 66,100 is what the markets are eyeing. And below 65,350 again, the uptrend becomes vulnerable. So these are crucial levels in terms of Nifty as well as Bank Nifty that we should be watching out for. From an F&O perspective, if you go to see, the call contracts have reduced now. The highest put OI is seen at around 19,400 and the highest call OI is seen at 19,500 again. So watch out for these levels pretty closely in trade. So no clear direction that is emerging yet in today's market. Like yesterday, we had the weekly expiry, and that's the reason the volatility was high, and we did see a good up move coming in. Whether a similar trend continues in today's session is what we need to see.
Absolutely. And a few of those names where we were talking in the newsroom as well and saying, what's the trigger? What's the trigger? One of them in particular was CEAT, which in yesterday's session was up about 20% at one point, crossed the 10,000 crore market cap level. What are you picking up on that? And the other tire company, of course, that also hit a 52-week high, JK Tire.
Absolutely. So if you see in terms of both of these tire companies, after we actually were mulling over what's happening, I was looking at in terms of what's the kind of market share they have in the two-wheeler space. And again, it is your Hero and Bajaj which has actually triggered this rally in terms of the two-wheeler companies as well. If you see in terms of CEAT, a 19.5% move, JK Tire, or 8.5%, both these counters actually scaled 52-week highs. And CEAT, in terms of the two-wheeler space, has clearly given out a strategy that they have been increasing their market share. And they get 28% of their revenues from the two-wheeler segment, which was around 26% in FY22. Now, clearly, they are leaders in this space. Premiumization is, what they are looking at. So clearly, with the two-wheeler space coming and launching in the premium category, CEAT will be one of the key beneficiaries as well. In fact, their premium category mix has almost increased by a little over 2 times since FY19, which has gone up to almost 23% in FY23 from a 13% in FY19. Hero, Bajaj, and Royal Enfield, all the three are their key OEMs as well who they cater to. If you see, 13 analysts have a buy rating on the counter, 5 have a hold. However, the return potential is a negative 20% on a consensus basis, but clearly key beneficiaries coming in there. Similarly, if you see JK Tire as well, 3 to 4% is the market share in the two-wheeler space. It's small. However, they have a 7.9 million tire capacity, and Hero, Bajaj, Royal Enfield, the same OEMs that JK Tire caters to as well. So it's a complete rally which has come in consensus with what was happening with your Hero as well as Bajaj Auto, Alex.
So that and that mix is very important to watch out for. Like you pointed out, the input costs also have been favorable, at least in the recent past.
Your crude and
falling is benefit. Carbon black.
Both.
So carbon black is something to watch very closely. The other counter that we were scratching our heads about yesterday was the top gain on the Nifty 50, M&M gaining about 5% or thereabouts. And again, no very clear trigger, right, Hiral? But then things are seemingly moving in the right direction for the business.
So absolutely. If you see in terms of M&M, Alex, I think it seems to be that the rally has started late in terms of the June auto sales numbers that did come in for an M&M, because the June numbers, if you see, were above what the street was estimating. And this is the fourth month in a row where sales have surpassed that 32,000 mark in terms of M&M. They've sold around 32,585 SUVs, where Scorpio, Bolero, as well as XUV, the XUV 700 have been the top sellers for them. Now, very interesting is XUV 700 has actually crossed the 1 lakh delivery mark, and this is just in 20 months since the time they launched. And in terms of the first quarter, the cumulative sales have actually crossed the 1 lakh mark as well. So that's the milestone, that we've been talking about so far. 38 buy calls coming in terms of M&M, and a return potential, again, on a consensus basis is very low, taking the sharp run up into consideration. But again, there is positivity specifically from the SUV category, and they've been increasing their capacity as well, on a quarter-on-quarter basis to meet the kind of demand and the waiting period that people have for an M&M,
and
product.
let's not also forget the farm equipment sector, which is absolutely humongous for them, and a good spatial distribution of rainfall in the current monsoon season would certainly augur well for rural demand and thereby tractor demand as well. So usually it's found that if one engine is sputtering, the other engine works well for M&M, and that's been the story.
If both work together, engines.
Yeah. So if both work together, it could definitely be tailwinds for this counter. Reliance Industries, again, we were wondering yesterday why the stock was up. It was up about 2% in trade today, and responsible for quite a bit of the gains for the Nifty 50 as a whole. But Sajid is here to tell you why that possibly was the case. And Sajid, it has to do with a development from the NCLT.
That's right. Good morning, Alex.
Morning.
It's primarily because of the demerger news which is coming from Jio Financial Services. The NCLT yesterday approved the demerger, the scheme of arrangement which allowed for demerger of Jio Financial Services, and it's coming much earlier than expected because the market was expecting it by September. They've already got an approval in July, so by end of July or August, early August, you'll see the Jio Financial Services listing on the stock exchanges. To give a perspective there, the share ratio is 1:1 because it's a vertical demerger which is there. So every shareholder Reliance holding one share will get one share of Jio Financial Services. It holds 6.1% stake, which is a treasury stock which was there in Reliance Industries, has been demerged into Jio Financial Services, and that would also act as a capital for its future growth expansion. And this is valued at around 1 lakh crores or over 1 lakh crores or nearly $12 billion there. That gives Jio Financial Services a base value of around 160 odd crores. Brokerages are varying between 160 to 180 rupees per share. That's the kind of valuation that Jio Financial Services will have upon listing once the entire record date is announced by the company there. Among the businesses, it has Reliance Retail Finance, which is into on the shop floor, on the ground, which is there. Reliance Retail Insurance is there. Then you have a payment solutions business. GeoPay will be there. Payment bank license comes under this company, and Geo Information Aggregator. So it's almost like a fintech company of Reliance Industries, which will be getting listed on the stock exchange. In FY22, it had a revenue of nearly 1,300 odd crores. We don't know the exact numbers for FY23, but hopefully when the annual report now comes out, you'll have some color on Jio Financial Services with respect to the financials.
Right. Thanks, Sajid, for getting us the details. And it's going to be interesting to watch out for in terms of Reliance, because clearly in terms of the stock price as well, beginning of the year, it was pretty somber, but now it started to pick up pace as well. And if you see in terms of from its 52-week high, it's already trading at a 7-month high, so a couple of percentage points away from its 52-week high. Whether this news will take it
So there are two
to
triggers,
those
right?
levels.
Yesterday we were talking about the AGM coming in. Now you have the Geo Financial. So hopefully before the AGM, you will have that Geo Financial Services also coming in.
Right. So a lot of triggers coming in for Reliance Industries. So watch out for this company pretty closely in trade. But moving on, another stock that is in focus in today's session is the HPCL. A good run in yesterday's session. The stock ended with gains of almost around 3 to 4% in trade. Himansh is standing by with more. Good morning, Himansh.
Good morning,
What is it that you're picking up on our HPCL? Because capacity is what they are focusing on now.
Right, building capacity. And Hindustan Petroleum is planning to expand its capacity up to 15 million tons per year at its Vizag refinery plant. Back in March, not too back ago, they enhanced their capacity from 8.3 million tons to 9 million tons per annum by replacing an old distillation unit. On average, HPCL refineries are running at 105% capacity. With refinery operations at full scale, HPCL is expected to import more oil, crude oil from other countries as well, and process it to yield, higher margin products like gasoline and gasol. According to reports, the fuel for the expanded capacity will be sourced from Middle East, West Africa, and the US and Russia, now added to the mix. The increase in imports can be seen coming in from the middle of next year, depending on economics, according to reports. Additionally, HPCL is set to commission a 3.5 million ton per year hydrocracker and sulfur unit. The two hydrocrackers will upgrade heavier feeds such as vacuum gasol and bitumen to value-added fuels such as jet fuel and gasoline. A residue hydrocracker of similar capacity is also planned in the coming 2 months, which will enable processing of an additional 1 million tons per year of fuel. Now, talking about the stock performance, the stock was up 3.8% as of yesterday's trade, and it's up 25% year to date. Amongst all the analysts tracking the company with all these plans in the pipeline, 23 recommend a buy, 5 suggest a hold, and 4 recommend a sell. And the target 12-month price implies a 3.8% downside overall. So that's HPCL and their plans for the coming year.
All right. Thanks so much for that, Himansh.
Thank you.
And speaking of crude, by the way, there was a development overnight with regard to Saudi Aramco raising the prices for quite a few of its clients, not just in the US
Mainly
and
for the
Europe,
Asian market,
but also for
buyers
the
as
Asian
well.
markets.
Yes.
But then that also points to the likelihood of certain buyers moving even further away from Saudi Arabia crude. Already you have India, that is a much larger buyer of Russian crude as things stand right now. For now, though, let's turn to business updates, and we've been getting a host of them in the recent past. A bunch of them coming in yesterday as well. Titan, as well as Kalyan Jewelers and Dabur, all three of them giving out their business updates. Mika joining in to tell us more. Morning, Mika, what are you picking up?
So firstly, Titan released its pre-update for the first quarter. Their quarter one standalone revenue grew by 21% year on year, and their jewelry business added 17 new domestic stores on a net basis. The watches and wearable segment grew by 13% year on year as a result of a strong demand from the wearable segment side. Their eye care business reports 10% year on year growth in the quarter with 7 new stores added. And the new engines, which is Tanere and Carrot Lane, continue to grow ahead of the company average. Dart Research maintains an accumulate rating on the stock and expects a 16.4% revenue growth. Prabhudas Leeladhar maintains a buy rating with a target price of 3,242 rupees. The brokerage believes that the expansion of 100 stores in the eyewear segment in FY 2024 and scaling up their emerging businesses will be major growth drivers for the company. Talking about its peers, Kalyan Jewelers also came up with their quarterly updates yesterday. The consolidated revenue growth for the recently concluded quarter was 31% compared to the previous year. The company witnessed a 34% growth in their India operations compared to the FY 2023 quarter one. As a part of the company's current plan to launch 52 new showrooms this year, 12 new Kalyan showrooms have been added across the non-South markets, units, and the company also expects to launch 20 new more before Diwali. Their revenue growth for the Middle East stood at 21%, and contrary to the positive numbers, their online jewelry platform recorded a revenue degrowth of negative 22%. And concluding, Dabar also came up with their quarterly updates for this financial year. Both their urban and rural market demands have shown sequential improvement, resulting in a pickup in the industry. Their India business is going to see high single-digit revenue growth, and their healthcare and home and personal care segment is expected to deliver double-digit growth with a mid-single-digit volume growth. Contrary to that, food and beverages is going to witness a muted performance due to the unseasonal weather, and the consolidated revenue is expected to grow in the double digits. Morgan Stanley maintains an overweight rating on the stock with a target price of 606 rupees, and the brokerage expects the gross margins to improve. Prabhudas Leeladhar maintains an accumulate rating on the stock with a target price of 590 rupees and expects an EBITDA margin recovery of 400 basis points quarter on quarter. And lastly, Dart Research maintains an accumulate rating and expects a 10.5% revenue growth on a consolidated basis for the company.
Right. Thanks, Mika, for getting us the details. It's the consumption pack that is going to be in focus. However, you had the FMCG sector, which did see some bit of profit booking in yesterday's session. Moving on, the real estate space is also in focus. It was one of the top gainers. Yesterday, you have Sobha, which has come out with their quarterly update, and clearly the trend continues to be strong for this Bangalore-based real estate company. Varsha standing by to give us more. Varsha, what is the number indicating?
Good morning, guys. So let's see what Sobha has given for its investors. So the company achieved its highest everly quarterly sales with growth of 27.9%, followed by highest ever price realization of rupees 10,506 per square feet. Growth in total sales volume was around 2.6%. Plus, it released inventory of 7,79,000 square feet in ongoing projects, mainly in Kerala projects. Now, the good thing about Sobha is that it has reduced its debt very nicely. Plus, the margins are expected to improve due to legacy contracts out of the business, and newer residential launches will aid its margin. Because if you see in FY23, the margins of Sobha the PAT margins were around 3%. So the medium target is expected to be around 10%. Now, the real estate sector is going to continue its growth, led by GDP per capita, then larger disposable income, plus urbanization. And also, if you see the real estate business, it's a really tricky business, and Sobha has seen a lot of events, like there was this ED issue, there was this SEBI issue, now recent IT raid. Plus, real estate being a cyclical business, one need to be cautious for the same.
Thanks for getting us all the details, and this is going to be a stock to watch out for as well in trade today. But moving on, a lot of other companies, Alex, that will be in focus in today's session, specifically from the metal space as well.
Absolutely, and they have been a little quiet of late based on what we're seeing as compared to some of the other indices. Of course, you mentioned FMCG a while back, and you talked about real estate yesterday. But Tata Steel is going to be in focus today, and there's a business update to tell you about. And there's also another counter outside of that space, JK Cement, to tell you about. Rishi is joining in to give you updates on both of those counters. Rishi, what do you have for us? Morning.
Good morning. So Tata Steel came out with its quarter update, and its crude steel production grew 2% to just over around 5 million tons. And also its deliveries grew 18% to 4.8 million tons in the first quarter. Now, the best performing segment overall would be its retail segment that grew 37% year on year. And within the retail segment, there's Tata Ashiana, which was introduced in 2018. It is an e-commerce platform for individual home builders, and it saw a revenue growth of 18%. Now, the planned massive modernization and relining that the company undertook in its Netherlands blast furnace led to a 26% decline in its Europe crude steel production. Now, overall for the metal pact, and also for Tata Steel, most analysts feel that the performance in the first quarter would be a bit suppressed, given that the commodity prices have all fallen. Now, the raw material prices have also fallen, but their impact on the cost is expected to come in only by the next quarter. So that's something to look out for. Now, secondly, JK Cements, it increased its stake in Acro Paints to 80% after it acquired an additional 20% for 60.24 crores. Now, this acquisition was part of JK Cement foray into the paints business. So in March last year, it had announced that it is going to invest 600 crore worth of investments that will be spread over the next 5 years. And also, so subsequently, it acquired the initial 60% in Acro Paints in December, and it announced that it will acquire the rest of the 40% within the next 12 months. So we may very well see the additional 20% to also be taken over by JK Cements very soon. Now, like JK Cements, there's also Grasim, JSW Paints, Pidilite, and Astral that are all looking to leverage their brand recall in the building material space, and also take advantage of the distribution network that overlaps with the paints as well. Now, the paint industry is expected to grow 25% in the next 2 to 3 years, and that is what really attracting all these new players. So it will be interesting to see how these new players actually bring in their expertise and their synergies, and also how it affects the existing paint players.
Yeah, like you have a cement player who's looking at the paint industry in
Yeah,
terms of
paint
JK,
player.
and you have Asian Paints, which is looking at the
Yeah.
cement industry by setting up a plant in UAE. So it's an interesting mix that we're picking up.
Certainly. Thanks so much, Shashi, for that. Let's take you through a few more stocks that you want to watch out for in trade today. And these are all developments mostly from the stock exchange notifications. Indian Oil Corporation as well as Praj. There's a notification that states that they've signed a term sheet to strengthen biofuel production capacity in India. This is par for the course, really. This is essentially what Praj has been engaged in. The joint venture will include production of sustainable aviation fuel, ethanol, compressed biogas, biodiesel, and biobitumen. Jefferies has sent out a note on all cargo logistics that you should watch out for. They've maintained the buy with a target price of 370 rupees. That's a huge downtick from the earlier target price of 500 rupees. The demerger of the CFS and real estate segments are effective from FY23. That's something that they're pointing out. Global container freight rates remain weak, and the express profitability turnaround is on the way. It's still a good franchise according to the company, according to the brokerage rather, at 14.3 times FY24 price to earnings. Indian Hotels has signed 11 hotels in the first quarter and opened 5 new hotels across destinations. Suzlon will have a board meeting today to discuss fundraising plans. And finally, in Piramal Enterprises, there are a number of acquisitions that have taken place. You had a small cap world fund INC that sold 61 shares. That's about 2.5% stake. Plutus Wealth Management bought about 0.5% stake. BofA Securities Europe bought about 0.4% stake. Tata Mutual Fund bought about 0.4% stake, and a couple of others as well of large transactions in this counter. Eris Life Science, finally, Shah Rakesh has sold about a 2% stake, and HDFC Mutual Fund has bought about 1.5% stake at a price of 697 rupees a piece.
Right, so lots to watch out for in the secondary market, but one important one that's going to come in from the primary market is the IdeaForge listing. Sajid, welcome back. Firstly, do you think IdeaForge is going to be able to fly its drone high today?
It seems so. When the IPO launched, you saw the change in policy happening with respect to export of drones, and IdeaForge is in that segment where it can export these drones without without individual licenses, right? It's a 3-year license which has been given to them. But looking at the IPO, 672 rupees per share, that was the pricing of the IPO. It was subscribed nearly 106 times. If you look at how the listing is going to be given the kind of demand and what we are hearing from the grey market, it's going to be some 75% of premium which is going to come in. So you're going to see a listing of about 1,000 rupees. There will be a lot of volatility in this stock. Pre-open would be something which needs to be watched out for. And over the next 1 month, we're going to see how many of the investors who have logged in or have got minuscule amount of shares will be able to sell the shares over the period of time. And the ideal thing would be to see how a drone company is going to be valued by the street going forward. This 672 rupees is a basic price, but the listing will happen at about 1,000, and eventually there will have to be a way of valuation of drone companies, because some people are divided that we should be looked at like a manufacturing, but if it's a manufacturing, then you won't get a good PE, and IdeaForge would be at a very high PE.
Right. So I think whether the valuation, absolutely, as you mentioned, post listing over a period of time, whether that is sustainable or not is what we need to see, because you have all your recent new age companies. That's been the major concern from a valuation perspective, where, you've seen listing gains, but post that, the kind of drop that we've seen in the stock price has been really huge.
One stock which comes to mind is Dronacharya, which is in the SME segment, and it was backed by good marquee investors. But we saw that stock jumping, and then there has been a lot of correction which has come in. So, but Dronacharya is into drone trading; it's not into manufacturing. So it's a
they're pilot traders. They are RPTOs, basically.
yeah. So and here. It needs to be seen how they're going to evolve the business, because when I spoke to the IdeaForge management during the IPO, they were talking about 3 or 4 models which are available for revenues, whether it's drone as a service or a software or other manufacturing or any other product which they do. But currently, I think they have a lot of order book coming from the government of India.
Yeah, the defense is their core.
More than defense, I think, is land mapping, which is a big area which they've been doing. So that's something which will be looked at, how order is going to come in.
Right. So I think overall, and being a niche segment right now, the order inflow is mainly from the government companies, and agriculture as a vertical is something which is actually becoming very strong for the drone space. Thank you, Sajid, for getting us the details. But overall, if you see, we've spoken about the secondary market, we've spoken about the primary market, Alex. A key development coming in the mutual fund industry as well, and specifically taking the small cap companies into consideration, because the run up that we've seen in the companies, is that leading to any action in the mutual fund
certainly
space?
And in fact, what Hiral was just pointing out is the second mutual fund in just a span of a couple of weeks that has announced that it is stopping fresh lump sum inflows into its small cap fund. And this one was Nippon India Mutual Fund. The last one was Tata Mutual Fund. Both of them have stopped lump sums, but SIPs are flowing in. They have very interestingly pointed out exactly what Hiral was just mentioning, which is that there has been a significant run up in small caps, 15% for the small cap index in the year to date period. And I'm quoting exactly from the notification that they sent out. The limit on subscription of units of the scheme is being proposed to facilitate gradual deployment of corpus in order to align with the nature of small cap investing. So seemingly, there is concern from the fund manager's side that there is too much of a run up in a very short period of time here, and that is not providing valuation comfort. And so they don't want to take a lot of money in.
I think they don't know where to allocate the money, right?
And a lot of people are catching on to that bug, because small caps have performed so much. They think that this is now the time to deploy. So you have a lot of retail interest that is coming into the space.
Right. And whether now this rally is going to be sustainable, until when can the rally sustain in the broader markets?
In fact, that is exactly what I want to speak about next week on the Mutual Fund Show on Wednesday. I'm lining that up even as we speak right now. In fact, I will be speaking to Tata Mutual Fund in all probability. I will confirm in just a bit. But speaking of next week, there's another big event that you should watch out for on the 13th. And that is on Thursday next week. It's a BQ Prime event, and we're speaking to the top names in the equity markets, and we're focusing on the India opportunity, because this indeed is a humongous opportunity for everybody involved. And certainly in the recent past, foreign institutional investors seem to think the same.
Absolutely, and they have been buyers, and they are the ones who are actually providing support, wherein you have the domestic investors who are selling right now. Whether this will be able to change the trend, for the domestic investors, is what we need to wait and watch. So please tune in to BQ Prime on the 13th at 5 p.m. to get more on the event and a lot of information about what's best for you to invest in.
For now, that's all we have for you in this edition of Trade Talk. There's a lot more coming up over the course of the day. Stay tuned. This is BQ Prime.